Welcome everyone to another nightly class. So for tonight, the topic we're going to be talking about is basically finding a plan in pre-market, how to actually align yourself to start the day and not just show up last minute and basically uh, improvise your way through the market. It's very important to prepare. It's very important to find a way to make it work, especially with how you are as a trader, personality wise, knowing what your strong suit is, whether that's trading open, knowing if that's waiting till later in the day. And before any of that, the main thing that I'm going to hope that you guys understand as I talk about is basically having your mental right before stepping into the room or wherever you do your trading at, whether it's your phone, whether it's an actual PC or just wherever you do it. If you're not mentally sane or like calm that day, maybe there's stuff in life bothering you. A lot of people don't comprehend the fact that you're going to do things with trading that you don't want to do. So having a calm mindset, being at peace with however the day goes, basically, that's the biggest start to that pre-market planning. The biggest thing that I love to do before getting ready for the day, and I'm going to tell you guys like multiple mentors that I've had, this is a main question people usually ask that care about like, and they understand trading isn't just making money. You trade a chart. It's literally all mental, knowing when to buy, when to sell, when to be patient, when to get into a trade with low risk, high reward. How do people comprehend the fact of patience and how do they wait for stuff to happen without forcing themselves into situations? So one thing that I personally do when preparing for the day, I put multiple different things people probably do, whether it's like working out, you wake up and you eat a certain breakfast, you go on a walk. Everyone has like a starting point with their day, whether it's they stay in bed till 30 minutes until market open, and then they just hop out of bed and just go do whatever they can find. For me, I'm always well awake before market open. I'm always watching stuff in pre-market. I'm looking at the overall sentiment to see if like any news is coming out, possibly to like shape the market in a certain way, whether it's out of the country news, maybe there's like the data releases that we usually have with like speculation coming into them. I want to know if there's any fear in the market from the news slash journaling perspective of like TV and all those kind of people. Are they putting fear in the market that could invalidate levels that I could have? Am I going to have to prepare for a chop market? Am I going to have to prepare for a possible directional day? I try and figure stuff out based off the fear that's put onto us by the media, by possibly like a big hedge fund sold shares in this stock. Big names, famous people or influencers are talking about a possible company that's not doing well. I try and find an overall median before just looking at candles and trusting what I see, since word of mouth can usually play an effect with the market. So I know a lot of people, and I'm not one of them who works out early in the morning, but many people I know will go on a jog or they'll work out at the gym before even trading. So obviously, if you're on the West Coast, market opens at 6:30 a.m., waking up super early to work out, many people can't do or they don't have time. So that's not one of the things they do. Being on the East Coast, obviously people can wake up around 7 or 8, get a workout in. So it all depends on, does it fit your schedule? Many people that I've learned from in the past, they do work out before trading or even working out before they do anything in the day, whether they look at their phone, they check their email for work. They want to get that dopamine rush and just like let out all that discomfort or stress they have, and they work out before. And then, of course, the journaling. I know a lot of people, and myself included, I love the journal, basically like thoughts that I have morning and night during the day. It's better than keeping stuff in. And it's all about just like clearing the mental, whatever it takes for you to do. If you like to read books, you like to cook in the kitchen, you like to talk to your family members, you like to go to the park with your kids, whatever the case may be, you have to figure out what for you calms you down, puts you in a calm state of mind. And then another thing that I don't do it every day, but meditation, I feel like, especially me growing up, I was very misled with what that was. And a lot of people don't really explain it the way that I try kind of put it into my lifestyle. It's for me just relaxing, sitting, and being able to have a clear thought process of what I like, how I want my day to go, how I hope to imagine it happens. Basically, like set the tone for what's about to happen throughout the day. Everyone knows their schedule, whether it's they have to go to work, they have to pick up their kids from school, they have to go somewhere for a job project. You can imagine positive thoughts. It sounds crazy, but imagine positive thoughts, positive affirmations that you want today to bring, whether it's just like peace and calm, You don't want any hectic situations. So you're hoping that you just like keep a clear mind and let today just vibe the way it does. Having that clear state of mind, whatever it is for you as a person, everyone's different. It's very important to find that out before you get too deep into just trading as a whole. Trading, it can be done without really understanding the mental side of it all, but it helps clear things up when you don't really understand what you're trying to accomplish throughout the journey of this. And outside of the mental thought now, I'm going to shrink my screen just a little bit. One of the biggest resources that I use, and I'm pretty sure other people may do some of this as well, if not everything. I have a watch list on Webull, the brokerage that I use for my main charting. I have a watch list with only the sectors in the market. I have the market velocity index, the VIX. I have the uranium ETF, SPY, SPX, the QQQ. I have the NASDAQ, the Dow Jones, the US dollar, and then two of the biggest cryptos, just so I have an overview on the major markets in the United States. I have a basic overview of the entire concept. I can check the sectors out in pre-market. I can see what's doing good before market is even open. What sectors are hot already before open. I find specific ones. If I look through the watch list and I see that healthcare is one of the biggest green stocks in pre-market, I'll look into the healthcare sector to find stocks and see, is there correlation? Is there some that are delayed that have not pushed in pre-market yet? Are there some that are overextended in pre-market compared to the actual other stocks? I find differential. I find things that stand out that many people tend to overlook because they're so focused on the same thing every day. I look to see like, okay, I watch a batch of stocks, a few in each sector. I usually have about two in each one: energy, communication, financial, technology, consumer staples, healthcare, consumer discrete. I have select few that I watch. So when a specific sector is hot on the day, I direct my attention to those stocks that I know within the sector. I limit what my eyes look at to keep FOMO out of the way. If one stock is going crazy that I don't even watch, I don't want to focus on that. I only want to focus on what's hot on the day so I have an edge. Knowing, like, if communication is super red on the day, but consumer discrete, technology, those are all massive green, could communication sector be lagging behind the other tech sectors? Since there are some communication stocks in technology, in consumer discrete, could it be lagging? Let's see if I can find a stock within communications, maybe Meta, maybe Google, that's behind the actual market move. They have to catch up to keep that balance. So you can use that to your advantage. Find something that's standing out that has to either catch up, or maybe it's too far ahead that needs to pull back to match the other stocks or just the overall sector in the market. So knowing what's hot in pre-market, you understand after I briefly explain like how I use the sectors and everything within each sector. And FinViz, if you guys don't know or haven't heard of this before, I highly recommend. It's free. You just go to finviz.com and find the heat map. It literally tells you, like, this is what you'll see every day. It updates throughout the day. You can see what stocks, if you don't have a watch list, what stocks are hot within each sector. When you put your cursor over them on the website, it will pop out in like a little pop-out screen to see it better, give you more info of like the actual percentage up. This is what I like to peep throughout the day. Not like every 30 minutes, every hour. I just look at it at open. I look at it like halfway through the day and sometimes in the close. I try and not have like a photographic memory, but just have a good visual idea. Like if I'm looking at technology sector in this area over here, in the top left, say Microsoft is red on the day, Nvidia is red on the day, AMD is red, but Apple is like flourishing. Could there be an imbalance possible? Could Apple be somewhere higher than where it should compared to the rest of the sector? Could the rest of the sector catch up to Apple? I try and use the overview to find individual stocks that may be falling behind compared to the other stocks within the sector as they share as a group. I try and keep this up in open, see how stuff fluctuates instead of having to scroll through every stock on a watch list. I can see it visually as it moves in real time. And then knowing that, I can make adjustments throughout the day. Seeing everything that's like a major company being the biggest visually on the heat wave map, you can get a good idea of what's pulling back quick from going red to green. Maybe the whole market starts green, then in a few hours it goes red. You can see what stocks are still holding value while the rest is selling off. I like to keep this in so that it calms me down. It gives me a better visual than just seeing candlesticks move up and down. It kind of like creates that FOMO or like I got to get in. This is like you're just watching like a show. You're not really interested in like diving deep into it. Like when you watch candlesticks at open, you kind of get that urgency of wanting to just like enter and start a trade, not realizing it may not be the best place to go in right now. So when using, whether it's the heat wave map or just sectors in general or stocks within the sectors, where is the volume? I'm hoping a lot of you in here, you have individual stocks you watch, whether that's Amazon, whether it's Apple or Tesla, you know the average volume per day or like where the volume should be at around lunch hours, around power hour, maybe even in pre-market volume. So I like to use on Webull, and I'm pretty sure other brokers as well. If you make a watch list, you can categorize the list by volume on the day for each stock on the watch list. So in pre-market, usually around 9 o'clock or 9:10, just before market open, I like to check what stocks on my list that I watch every day, which one has the most volume. I already know how the list usually goes. Tesla's on top. You have Apple coming in second with AMD. So I know like which stocks are supposed to be on top. But if I see an imbalance on like, okay, hold up, why is let's say NEO has the most volume in pre-market? That's not normal. Let me see what the stock's doing today. That's a stock I watch. It's showing an imbalance with unusual volume that's higher than usual. So I'll check to see like, is there something going on with the stock? Was there news? I'm prepping before open. If I like the way the stock looks, I can use that, possibly use pre-market levels, check the chart to see if it's by a possible bounce zone or a rejection zone. Using the volume, it's like a secret guide kind of. You know what's hot on the day. You're not scrambling to find something to trade because everything else you usually watch, maybe it's not looking good. So you're just trying to find something to replace it. Why not just look at the stuff that you don't usually see or look for? The volume, possibly how are the contracts looking if you just want to see like the imbalance, if it's more expensive than usual. Is the overall market causing fear, which is making your specific stock not have as much volume because people don't want to trade it as much? There's always something to look for. And even outside of the volume, where are market trends leading into open? Let's see a few questions. Hang on. Do you prepare levels pre-market and mark out highs and lows to see if participants get involved and can push past those levels? So Chris, usually, and I'm going to pull up the Webull charts after I finish this document with Google Docs. I like when I scalp open, which everyone knows I rarely trade open. I like to have directions because it has a more calming effect when I find trends on the day while using the historical levels. I usually, when I do trade open, I look at the pre-market high and low. I'll see if the pre-market high and low for the day of, if they correlate with levels from the previous day or at least past few weeks. It's always a big thing for me when I do trade before like 11 a.m. since I usually don't. I like to see how levels from pre-market are respected in the actual opening push or maybe an hour or so in the market open. Just the pre-market high and low is what I use. And when I get over to the Webull and show the charts, I'll give a few examples like how I use them with previous day levels. Question for Easy, what is the update frequency on heat map? What do you mean by the update? Oh, like the time frame you mean. From when I've used it, it usually uploads, I want to say, I don't know if you have to pay for like the every second, but I want to say every 5 minutes or so. Unless if you just like reload the page and then the stocks replenish or whatever. But I don't usually keep it up like that to see if it updates. I look at it at open because you can't look at this stuff in pre-market. It only does the actual on the day. So you can't do it till 9:30 Eastern. I usually wait till like 9:40 or so after open to like let the stocks do their little like quick up, quick down kind of thing. I'll pull it back up lunch hours, and then usually before power hour to see if like one stock is fading off. Maybe there's one that's massive green when everything else is not doing too good. I just try and have even any edge I want. If that's probably the best way to say it. Any edge that I can find from my type of trading, I need in my favor so that the losses are minimized and my wins are going to be bigger long term. So the market trends lean into open. If you see whether it's SPY, the S&P, the QQQ, anytime you see strength going into open, that can usually cause people to want to buy ASAP, thinking it's going to keep pushing higher. I usually try and tell people, if you're not comfortable trading open, if you understand that you're not profitable trading open, give it an hour. Watch the market open. Don't just not sit there and then come back at 10:30 a.m. Eastern time and just start trading. Watch the open and try and see how things work, how things respect certain levels. There's always something you can learn when you're not trading. And you don't have to force anything if you don't really know what the trends are doing for the overall market. A lot of the time we see a sell-off overnight, and then in pre-market, SPY or the S&P is pushing up into open, and then we have a quick push at 9:30 a.m. Eastern, and then we drop into lunch hours, straight downside. So you can never really force yourself into trends until you know, are these actually going to work out? What's the bigger picture looking like to find a possible rejection if this pushes a little bit higher? Are we at a zone that may reject? Pre-market is all about the planning. You have the market's not going anywhere in pre-market. You can't do anything. If you trade shares, you can. If you're trading options, like obviously interactive broker, you can do SPX and pre-market, but you are waiting for 9:30. Why not prep and plan? Find weakness, find strength, have a plan before that bell goes off where you start actually being able to execute into stuff. So having a game plan, checklist for the day. When I speak on a checklist, a lot of people are like, oh, like you keep on your desk, you just like number one, do this, number two, do this. As you know what you have to do as a trader, many people, they just eat breakfast, they sit outside for a bit, they come in and they get ready. Know what works for you. Most people, a checklist, it's just their daily waking up habits. You wake up, you take a shower, you brush your teeth, you get food. Everyone does is something different. Some people need coffee. Some people don't need to eat breakfast and they wait till lunch to eat. That's just what I mean by have a checklist. Usually when you have like the same morning routine, you get into the flow of things, you start to just like cope with what you have to do as a trader. For me, I'm always waking up like before market open. I want to look at pre-market. I want to see what's going on. Like usually I'm up at 2 a.m. looking at futures just so I can see, okay, futures are massive green. Maybe in pre-market we may pull back a little bit. So I'm going to be looking for a possible pullback in pre-market. Like I'm trying to prep before I just wake up at 9:30 and go trade. Yeah, Mr. Trades, bro. Any time of the night. Any time of the night. So goals off levels. When I say goals off levels, and that's what I'm going to start typing real quick. Why is that doing that? Come on now. So when going for goals off levels, so I'm talking about the levels for charts. And when I mean levels, support, resistance, the stuff that you see and that you don't trust until after the move happens. The game plan of knowing where the levels are, what are they in effect for? What is the possible reaction if this support level hits off open? Could it bounce? Is there a reasoning behind why I have this level here? What is the goal of these levels? Why do I even have them here? Am I going to enter off them? Am I using them just to see how the market reacts around the zone? I always try and keep levels consistent. I don't change stuff very often because I'm very big on the overall zone that charts bounce off me. I'm not very big on like to the decimal, $110 a share and 24 cents. I just want to know about the overall zone unless it is like a pre-market high or low that I'm pinpointing off open. But if I'm looking at the bigger picture, I'm trying to find levels that have the highest frequency of repetition when price action approaches those specific key levels. So understanding that, that's how I look into what am I looking to size into when I get into these positions? What's my sizing based off the current market conditions? If I know the market's selling off in pre-market and I'm worried that we're going to have a sell-off and I may have already missed the overall downside, do I want to actually size heavy? Knowing like we've moved massive overnight, if I'm looking to do anything, maybe size light and get calls for a possible bounce, a relief bounce off open. I believe as a derivatives and equities trading in the US market, you got to have levels you agree. I mean, as retail, yes. Without the high-tech technology, like what hedge funds and banks have with the algos and everything, all we really have is historical levels and price action. And if you don't use what you see on the chart, you use the indicators in the moment, whether it's, I know a lot of people use the MACD, the exponential moving averages with the EMAs, the VWAP tapering. Everyone has their own strategy. And for me, I'm just a straight support and resistance based off historical price action. Everything usually repeats. So being an equities trader or anyone trading the US market or anything, it's all about like the charts. Tape forms the chart. So tape is a helper with that. People that use the MACD or the EMAs or the VWAP, that thrives off what the chart does. The chart gives everything the reaction. The tape is what forms the chart from the buyers and sellers. So I go off the levels based off like, oh, we bounced off this zone 5 times in the last month and we're back down here again. Going off probability, low risk is buying calls at that support and not hoping it breaks after 6 times buying puts. So I'm using probability and in the moment, figuring out how much I want to size. If the market is in my favor, like what I'm looking to have happen, everything's looking pretty good, I'll size accordingly to the day that I'm feeling emotionally. If the day opens up and we're just like sitting, SPY's only moved 50 cents upside and back downside for the first hour, maybe I'm starting to realize, okay, if I make a trade today, I'm not going to size heavy. Yes, I've sat here for an hour already, but I know when this kind of momentum happens, there's nothing happening at all. I can't force myself into any positions this early in the day. And if I don't trade today, guess what? It's the same thing I always tell people. You have the same amount of money tomorrow that you had today when you don't trade. It's like a reset button. You're not trying to make back anything you lost. You're not trying to make more and compete with what you did the day before. It's like a whole fresh start. You just want to wait for the best possible setup. So the next thing is going to be following setups that you know best. So many people, and when I say so many, I'm throwing myself in there as well. You always have to remember, you don't have to trade because you're bored. You don't have to trade because of FOMO. You don't have to trade because, man, I need to make one trade to feel successful. It's a bunch of bullcrap. You have to realize you trade what you're comfortable with. You trade what you have seen work in your favor. You have probability in your favor when you do what you know is best. Win or lose, you're waiting for a setup that you know is going to work because you've studied it, you've back tested it, you know that's your system. Everyone has different ideas, everyone has different entry points, but as long as you understand this is my risk with this play, I'll size accordingly for that risk. And this is a setup that I like to take. So win or lose, it's a successful trade if you just execute properly. So many people don't understand that. If you miss your move that you wanted, why are you forcing yourself into the same type of setup that you're paying 3 times as much for the same contract, maybe? So many people I know, and as I was saying earlier, I'm throwing myself in there. When I didn't have a setup I liked in the first 3 to 4 hours, I would force trades just to say I did something today. Win or lose, I just want to throw money in the market. The more I did that, I'd win, I'd lose for no reason. I'd win, I'd lose for no reason. I wasn't making money. So I had to figure out, what am I really looking for? I need to look at things in pre-market, figure out what I want to see form, and wait for that exactly to happen. Basically, like aspirations of what's going to form in front of me. Waiting for a proper setup. As charts form off open, I'm looking for a possible upside setup or a downside setup. And as it forms, I'll prepare either way. But I'm never just going in because, oh, this could happen. I got to get in before it's too late. That's no preparation. You're just going in blindly, hoping that what you're seeing is going to be in your favor. It's a 50-50 every time you trade like that. And half the time you're green 40%, you don't even sell, and then you sell when you're down 10% because you're scared just for the trade to go back in your favor. So you really have to understand, what are you really trading that fits your style, that fits who you are emotionally to hold a trade longer, or maybe you're a scalper that has to get in and out. You have to only trade those setups. And last but not least, the part that everyone struggles with, trusting levels as you chart them. This goes back to the same question that Chris had earlier about, like, you use pre-market levels to do what you use. How do you know what to like put in the levels as, or the zones? The biggest thing about charting, most levels always come back and respect them. As a resistance breaks on the upside, it usually pulls back and shows support, or at least contest that level again in the near future. If it's a massive breakout, obviously it won't come back down, but there's always going to be trends forming on breakouts. Higher lows are forming, higher highs are forming. You have levels as the price action is pushing one direction for only that way for a while. So as you make levels using historical 4 hours, the daily, the weekly, whatever it may be, you're using those in current times as the price is forming. The biggest thing that I feel a lot of people struggle with anyone can have a level, but knowing this is it, I got to get in before it's too late. Like I have to execute. That's an issue many people have, and there's nothing wrong with that. I don't always execute when levels hit, but I'm slowly getting into the feel of just because I'm like, I want to wait and see if it works out. I put myself in the situation to get in, whether it's a light or maybe a little bit heavier, just so nothing gets like effed up while I'm in the position. If I oversize, I may sell for a loss too soon. If I don't size enough, the regret most people have is like, if I would have sized heavier, I could have made more money. Trusting the levels is all about trusting what you are putting in. All this studying you've had for the past years or months, these levels are there because of the time you've put in. Trust who you are and not just what the charts are telling you from what you did. You have to be able to trust the levels and what you're doing with the work ethic or how much time you put into this. So I'm gonna switch my screen share over to Webull. Let me know if you guys see my Webull screen real quick, just so I can know that before talking. Is my Webull screen being shared, the charts? Anyone can just say yes. Okay, there we go. Perfect, perfect. So preparing for pre-market. Does first come, first serve. Someone give me a stock they want me to look at. First one to type it, that's all I'm doing. First one I see. I'm gonna wait till, okay, someone said PG. I actually know that stock, so that's perfect. All right, so preparing for pre-market. When I'm looking at pre-market, and now I'm referring to the charts. I'm not referring to like before I even wake up, before I get out of bed. I'm just looking at the pre-market levels for a stock. So when I'm using this, and PG always has light volume compared to the bigger companies, when I'm looking at the pre-market, I'm going to go to the 1 minute just so we can see the candlesticks a little bit better. So looking at pre-market, PG does not have a lot of volume. I want to say that again, just so you guys can hear me. Pre-market started around right here. So I'm usually always looking at the low and the high. A lot of stocks, you can't always trust the levels they're given, because I know you guys have seen also like SPY will have a huge random wick for no reason in pre-market sometimes, and other stocks do the same. I chart the low and the high, and I try and use these as opening is going. I'm not saying, oh, pre-market high was hit off open, I have to get puts because it's going to reject. Oh, we're breaking the pre-market high off open, I have to get calls before it's too late. I use these for reference, just understanding this is how high price went in pre-market, this is how low it went in pre-market. Just using these levels now, I'll usually zoom out to see, are these in correlation with any other purposeful levels historically? And looking at the pre-market high from today, this was a level that has touched before. If I go out farther on the 4 hour, we can see if there's any other repetition at that level. We've tried breaking out of here before, but can't hold. So around 158 area a share, 158 a share, we've broken above, but we've struggled to stay above that level. So not just, oh, it's pre-market high, I have to put a level there. When I go back and look at this level, we've had breakout that can't hold before. So you can use that into your thesis of this is the zone. Not just, oh, this exact pinpoint of the decimal at the pre-market high. Like that's fine if you want to do that, but I love to see why pre-market levels or pre-market lows stopped where they did. Why didn't price action push them higher? So now just putting a level here, we can see why there's been rejections. And when I was on the 4 hour going back, you guys saw we broke above the 158 a share, but have never held. So knowing that off open, I'm looking for a push. Okay, we broke above the level. Let me see how we react around here. As this shows a rejection, as it shows like it breaks above, but it can't hold, you can look for the downside. If you want to use the pre-market low for a possible bounce, you can. That gives you more confirmation to hold the trade. But I love using pre-market with historical data. I'm gonna just go to Airbnb so I can do 2 of them. I'm hoping this has a little bit more volume in pre-market. This one's not too bad. So once again, I'm putting a level on this wick right here. I'm putting a level. This is one of those wicks I was talking to you guys about. Stuff like this, I don't consider that an actual wick off pre-market. This is kind of like one of those, I don't even know the actual definition, but other stocks, they have like random shares come in, or like the ticker comes down, pushes back up, or the candlestick comes down, pushes back up. So I try and stay consistent with these areas because I know that's the opening price, but I don't want to use the wick on that bottom. So I'm using around this area. If you want to use the wick on this candle at 4 a.m. open, you can, but I kind of like how there was another candle around this zone. So using these, now I have pre-market levels that I'm watching off open to see how it reacts when it touches pre-market high or it pulls down to pre-market low. If I go to the 4 hour, is there any correlation with these two levels? I'm gonna take this down to a 30-minute real quick just to show you. We held the 140 a share a few times when it contested. Intraday, opening price action, even the one day we sold underneath that, we held the actual pre-market low level that I put in just now. So I'm not just like, I'm going to keep repeating this so you guys understand. I'm not putting pre-market levels in and then only trusting that day of. I'm seeing historically if these pre-market high and lows have any correlation, if there's any repetition as to why they're there. Most of the time there is possible levels that react. This day we pushed up all the way and rejected today's pre-market low. So I'm taking that into consideration. And then off open, whether you watch the 1 minute, the 5 minute, whatever the case may be, when I'm watching Airbnb, I'm keeping an eye on, okay, if we break above this level, I want to see a pullback and we hold around 140 a share to go higher. I'm not going to chase the breakout and hope we keep going because historically this has acted as a support zone when price action is above coming down. And when price action is pushing up towards it, we've rejected it. So I want to give it time. I'm letting the level form the candles. I'm not seeing, oh, a breakout happened, I got to get in before it's too late. Rushing this, you probably would have got calls and got destroyed more than likely. So the breakout happens, wait for the recontest, just like Mr. Trades just said. Resistance breakout, pull back to hold as support. If it doesn't hold and breaks under, you have two different scenarios you can use in this situation. So we have the first contest that couldn't break out. I'm going to zoom in a bit on this. There we go. So we have the first breakout that failed. Then we actually broke out all the way, tapped out about at 140 a share, 90 cents. We pull back to the same resistance we could not break out of, and we're trying to hold now. Can the trends make a higher high off the opening high? Can we push higher? As of now, we're making higher lows. But I want to see more trends form. I want to see more confirmation, not just we broke out, we recontested on 1 or 2 5-minute candles. I'm going to buy calls. The minute we reject here and pull under, the same switch happens off open from resistance to support. Now we're looking at a support to resistance flip for a possible recontest using the zones. At any point here, you can enter puts where this white highlight is. Just realize your risk. You have 2 places you can sell for a mental stop loss. The white highlight from the push that tried to hold the level or the high of the day break. You have 2 specific mental stops you can use to limit your loss compared to, which we can see now what happened, the possible sell-off. That is what I like to do with the pre-market high and low. I'm going to go to Apple real quick just because this is one that a few of the people I help, they also use this strategy. So they will take the pre-market high and low on Apple. So we got a wick up here. And then we got, I'm going with the solid candles, not this massive wick here. So about 4 candles on the same support area right here. And I'm going to actually delete these other levels just so we can focus on these ones. I'll make these yellow. So we got pre-market high and low for this Apple chart. Same situation as like with Airbnb. We broke out of this level. I'm looking for a recontest. We've had the 180.75 level. That was from charting this past week, and it actually rejected pretty nice today. We pushed outside the 179.95 level, pulled back to try and hold the support, and we failed it. Right when this rejection breaks back under, if you enter puts here, your risk, just like Airbnb and any other stock that has this formation, the previous lower high, that can be your first mental stop, or the high of the day is your second. Like, this is where you have to cut if you're holding a put and it bounces back. Once we break back underneath the pre-market high that we could not hold in, now we're playing the downside. Watch to see maybe how opening price reacts, maybe how the pre-market low reacts. You use that in your favor off trends. Yeah, I mean, Mr. Trade just said so simple and straightforward. The funniest thing about trading that took me years to figure out, the more simple you have a system, the more profitable you usually are. So many people, they have like 4 different indicators on the screen with the EMA, the VWAP, the MA, the MACD, divergence stuff. They have all this stuff on the screen. They get distracted from the biggest thing that's important, and that's the price action, or like the tape that forms the candles. Everything revolves around price action. So when I'm using levels, I'm just being patient waiting. I'm not letting like an indicator tell me, oh, this could be a momentum of a bull trend, like calls could be the good move right now. I'm just letting levels give me my entry, my exit, and the overall perspective of what could be is based off what's forming in front of me. I'm not just entering off hope. I'm using levels that are key and letting those basically give me my entry and exits. Does anyone possibly have SP says so simple we miss it? That's one of the biggest things about trading. 30 indicators, book map, tape, order flow, got all the subscription services, they still be losing money. A lot of people that promote themselves use quote unquote a lot of indicators that look like they're super high tech to draw people in. Trading simple is the best type of trading. Find your system, use that to your advantage, and do it repetition wise over and over. What's the contract price you would choose for the potential put play of the 180 level? So I like to break down the upside. So once we broke, I'm going to make this color orange just so I can say orange and yellow. When we broke the orange on the downside, which like you said, the 180 level, I'm going to pull this chart over to pull up the option. Whoa. Let me pull up Apple real quick. So the first thing you have to realize, do you want to play 0 DTE? Well, the week of, I should say the week of contracts, or a week out, which next week is the monthly expiration for August, or do you want to add a month of time? When you're looking at like, what do I want to do? It's big to focus on what can you afford. If you can size in $500 a position and at the money is $400, you can buy just one contract at the money that's safer, or you can buy 1 or 2 slots out that will cost less but have higher risk due to the fact that you need to move in your favor a lot faster. So when we're at 180, you have 2 choices. Do you want the 180 put or the 177.5? That's when you're focused on which one is best for me on the put side. The 180 at the time when it was at the high like that, this contract was roughly, and this was around 1045. The contract was roughly $100 a piece, 120 bucks. So if that's a contract that you are content with taking, yes, the contract is typically already in the money since we're at that level to break in and be like, we're inside 180 for the put premium. That's a safer bet because once you're in the money, the contract will move in correlation with the chart. As there's consolidation, as there are restrictions on support or resistance, the contract's not going to move as frequently outside of the actual Apple chart. If you play, well, actually, let me do a visual example real quick. So your entry, if you would have broke down the 180 a share to get a put, would have been around here. And I'm going to put this pullback level around there. First bounce, I'll make purple, and then we'll pull up the retracement as orange. The white will be the buy zone. So if we put the buy zone on the actual contract chart for Apple, roughly around this area right here, this would be your entry point, I believe. 40, 45, entry would be up here. So you're entering at roughly $120 a contract. On the first drop down to the purple highlight on the Apple chart, I'm going to also put that over here. That was at 1125. Just going to be up there. I'll make this purple. So when you're playing a 180 put at the exact level for a 180 on Apple, a lot of people don't want to do that because it's right at the money. I want to size less per contract to make a higher percent return. They don't really comprehend the fact that when you're playing contracts closer to in the money, they move closer with the actual stock chart. So looking at the 180 put, realize your entry and the pullback that happened, you're still up $20 a contract. And let me actually put this in so you guys can see the actual contract prices. There we go. So looking at this, you see, okay, this pullback to the orange highlight, I'm still up on the trade because you have the 180 put, you're already in the money. you're going to stay in correlation with the Apple chart better. But if we look at the 177.5 put, same time zone you enter, same pullbacks that happen, this is when things kind of come into perspective for a lot of people. They don't realize how much of an effect this happens on them until after they go back and track and see what the hell actually happened with time decay, why the contract got cheaper when it shouldn't have possibly. Compare this to the 180 put. This pullback to the orange highlight after entering around here on the white highlight, the contract's almost the same price, but trends are still holding. Since you're not in the money yet for the 177.5 put, you're going to have to hold this on pushes that may put you back to break even or red, even though Apple is a stock, is still in a bearish trend of lower highs. That's the biggest thing I try and tell people. Just because you're playing at the money, it doesn't mean you're not going to make as much. You're technically preserving yourself in a position that will save you a headache, save you the mental capacity that may freak you out of a trade that is still holding trends. So I would have taken the 180 put only because of that reasoning. Having the 177.5, say you chase this past the break and you got in at this white highlight, which was roughly around 10:50 a.m. Eastern, your entry point would be at the top right here. Now you're red on a pullback that's still just at the same area. So it's very, if you can afford to play at the money, I would recommend it due to the potential of having low emotions during that trade. If you are one of the traders that likes to play 2 or 3 slots out, maybe just add a week of time just so you can afford to do it on pullbacks. I mean, using the next week 177.5, we have the same entry point around here. The pullback that happened for next week expiration is right here on the orange highlight. So look at that differential now if you played a week time. That's what I like to tell people about. The idea that it's not really trying to hit a home run with contracts. You want to fit the best that links up with how the stock moves. Knowing that Apple can move maybe $1 or $2 a day, maybe buying a premium that has to get a 5-point move to be in the money with a day left, it may not be very smart because you need a massive flush for Apple to hold value on that contract. Playing at the money, you can hold longer, you can make a higher percent return and not be shaking out of pullbacks that happen on the chart. It will give you that edge to be able to hold better overall. Comfortable for me to hold with premium fluctuations. Yeah. Place buy $2 to $3 out the money. That's usually the best way to do it. Do you guys have any questions, any concerns? If you guys want to type that up right now, if you want me to go over anything real quick. Does anyone have any questions outside of what we just talked about? Anything whatsoever? Do you like trading patterns? So there's specific patterns that I do like to trade, only ones that I personally have journaled and back tested multiple times. I don't just trade whatever I see. So if there's a bull flag, I don't usually trade bull flags. I like to just look for a support underneath. I like to go for the cup and handles, inverse cup and handle, inverse head and shoulder. I don't like the usual head and shoulder. I like higher highs and higher lows off trends. Symmetrical triangles or a squeezing wedge with price action. A lot of stuff that I use is a timely manner that takes for a pattern to form. So if I'm looking at a cup and handle, and I can pull up Netflix for this just to show you guys very quickly what I mean. So a lot of patterns you can see on multiple occasions. It's not just like you have to be on the 5-minute to 30-minute, everything you can see on the bigger picture. So when I'm looking at Netflix, and I'll use this example right here, let me go with the 4-hour. So a cup and handle, I'm looking to find, obviously everyone should know a cup and handle, you need like a curl after a tap out to make basically a bearish trend on the downside to push upside into a bullish trend. So when we have this rejection on the upper top of this candle, we're forming a bearish trend on the downside. When I'm starting to look at this patterns, once the trends reverse, so basically we had this rejection in the middle after we had that downside of lower highs, lower lows. Once we find a base and start forming this cup to basically push us, where's my arrows still? Where's it? There we go. So once we start to form a base and then push to the upside with a bullish trend, this is when I start to look for an entry point. A lot of the time, I'll wait for a break in this middle rejection. Once we have like lower highs, then we have a double top. I want to see a break above that double top and a pullback to enter for like that wedge that forms on the cup and handle. This is when I start to look for an entry at this point right here, where this red highlight is. Cup and handles for me, I like to do that. Some people just like to play breakouts or the ABCD pattern, possibly a breakout level of resistance to buy continuation possibility. Cup and handle for me is like, that's my biggest play that I like to go with, is the cup and handle. How do you become your own Federal Reserve? You have to ask Rippy God, bro. So far, so good. I like that idea of playing in the money instead of out the money. I will try that next time just to get less contracts. Yeah, so Goose, the biggest thing about playing closer to in the money or one slot in, it's the fact that you can hold the chart and not be scared out before the move happens. So many people, they get into a play that they're oversized in. They're up 10%, down 20%, up 20%, back to break even. And eventually, some people that can't handle those kind of moves, they start to freak out and they end up selling for a 20% gain because they're so focused on, I don't want to keep going back red. I just want to get out for profit, not realizing the move may still be holding in the direction you need for trends. Breezy, can you call out weekly SPY conquest for spring? Yeah, Habibi, I got you, bro. I'll start the correlation with the SPY contracts. If I trade SPX, I'll alert a SPY swing that has a week or two of time that still costs about the same as SPX, if not cheaper. Finviz has a pattern finder. I'll have to look into that. Are there any more questions, you guys? Anyone at all? Questions for me as well as a trader, or any advice you may want? Anything at all?